Did you know that a single day in 2025 sent gold prices soaring to historic heights above $3,085 per ounce? What happened on Liberation Day didn't just shake global markets, it completely transformed how smart investors approach gold. If you want to understand the seismic shift that's reshaping precious metals investing, make sure to like this video and subscribe for more market insights that could change your financial future. Liberation Day, April 3rd, 2025, will be remembered as a watershed moment in precious metals history. This wasn't just another market fluctuation. It was the day that redefined gold investment strategies for a generation. Today, we're diving deep into exactly what happened, why it matters, and how you can position yourself for what comes next. Liberation Day refers to the highly anticipated announcement by President Trump regarding comprehensive tariff implementations that had been building market tension for months. The financial community dubbed it Liberation Day because it promised to liberate American industry from foreign competition through aggressive trade policies. The buildup to this day created what analysts called peak uncertainty, a perfect storm of economic anxiety that sent investors scrambling for safe havens. Markets held their collective breath as everyone waited for the tariff details that would reshape global trade relationships. When Liberation Day arrived, gold didn't just rise, it absolutely exploded. The precious metal rocketed more than 17.5% year-to-date, delivering its strongest year-to-date performance since 1986. Prices catapulted beyond the former all-time high of $3,058 per ounce, reaching a striking peak of $3,085. This surge wasn't random. It was driven by three critical factors: tariff uncertainties that threatened global trade stability, rising inflation alarms as investors feared price increases from import duties, and nagging fears of a looming economic slowdown that could devastate traditional investments. Liberation Day proved that technical analysis had reached a new level of precision. Gold hit a crucial Fibonacci extension target of approximately $3,167, a level calculated using advanced mathematical principles that most investors had never heard of. Here's how the calculation worked. Starting from gold's 2015 low of $1,045.40 and the 2020 high of $2,078, analysts used logarithmic scaling to project future price targets. The ratio between these points was 1.988, and when raised to the power of 1.618, the golden ratio, it predicted a target near $3,167 per ounce. The fact that gold reversed almost exactly at this technical level sent shockwaves through the investment community and validated sophisticated mathematical approaches to market analysis. Liberation Day fundamentally changed how investors approach gold. The traditional buy and hold mentality gave way to more sophisticated, technically driven strategies. Strategy 1. The Fibonacci extension method. Investors began using mathematical projections based on historical price relationships to identify precise entry and exit points. This approach moved beyond simple support and resistance levels to complex ratio-based targeting. Strategy 2. Safe haven rotation. Liberation Day demonstrated that gold's role as a safe haven had evolved. Instead of just buying gold during crises, investors learn to anticipate uncertainty periods and position themselves before the crowd. Strategy 3. Multi-metal diversification. The Liberation Day effect extended beyond gold to silver and copper, teaching investors that precious metal strategies needed to consider the entire commodity complex, not just individual metals. Liberation Day provided a masterclass in market psychology. Gold and copper rallied for weeks on rumors of tariff increases, but when the actual announcements came, sophisticated investors began taking profits. This created a new investment paradigm, monitoring not just news events, but the market's emotional response to anticipated news. Smart investors learned to position themselves opposite to the crowd's emotional reactions. Liberation Day revealed the complex interconnections between gold, currencies, and equity markets. While gold surged, the US dollar index showed technical signs of a reversal, creating opportunities for currency-aware gold investors. The stock market's reaction, initial decline followed by potential recovery, demonstrated that gold investors needed to understand broad market dynamics, not just precious metals fundamentals. Liberation Day accelerated trends that were already reshaping gold markets. Central bank buying remained strong, with institutions recognizing gold's role in an increasingly uncertain global economy. Consumer demand from India and China continued growing, creating a fundamental floor under gold prices. Financial institutions began incorporating Liberation Day lessons into their investment models, recognizing that geopolitical events could create sustained precious metals trends, not just temporary spikes. The Liberation Day experience taught investors that modern gold strategies required sophisticated risk management. The ability to identify technical targets like the Fibonacci extension levels meant investors could set more precise stop losses and profit targets. This mathematical approach to gold investing reduced emotional decision-making and created more disciplined investment processes. So, Liberation Day really marked the beginning of a new era in gold investing. Analysts are projecting that gold could reach $3,100 per ounce by the year 2025. This is expected to be driven by interest rate cuts, ongoing geopolitical tensions, and worsening fiscal deficits across the globe. The key lesson from Liberation Day? Well, it's that successful gold investing now requires a few critical skills. You need technical analysis skills to identify mathematical price targets, an understanding of global economic interconnections, the ability to monitor market sentiment and positioning, and, of course, disciplined risk management based on precise calculations rather than emotions. Liberation Day wasn't just a single day of market volatility. It was a paradigm shift that separated sophisticated investors from the crowd, those who understood the technical, fundamental, and psychological factors at play positioned themselves for extraordinary gains, while others were caught off guard by the speed and magnitude of the moves. The gold market has evolved, and so must your investment strategies. Liberation Day showed us that in today's interconnected global economy, precious metals investing requires a combination of mathematical precision, psychological awareness, and strategic positioning that goes far beyond simply buying gold when you're worried about the economy. The question isn't whether another Liberation Day-style event will happen again. It's whether you'll be prepared when it does. The investors who learn these lessons are already positioning themselves for the next major move in precious metals markets. Thanks for watching this deep dive into how Liberation Day transformed gold investment strategies. The precious metals landscape has changed forever, and understanding these dynamics could be the difference between capturing life-changing gains and missing the biggest opportunities of our generation.